You are aware that a professional liquidated all of his stocks? Many investors were taken aback by this move, and the majority of them started to wonder what had happened. Should they cling onto their shares of stock or sell them out now? To find out more, be sure to keep watching and tuning in. The majority of Tesla investors don't seem to waver in the face of business news. The main reason for their lack of concern is that news about the company is almost constantly available. On the other hand, some people are frequently concerned when there is bad news regarding the EV company, particularly new investors. You'll learn today why a professional liquidated all of his Tesla shares. The managing partner and founder of Full Cycle, Ibrahim Al-Husseini, recently appeared on CNBC's Tech Check to talk about the value of Tesla and what he would be ready to pay to reinvest. Ibrahim Al-Husseini is a well-known venture capitalist, philanthropist, and entrepreneur with an emphasis on sustainability. He has over 25 years of expertise in sales, operations, and finance. He has spent a large portion of his career assisting angel investors in locating investments in clean technologies and natural resources with the goal of promoting global social change and earning substantial returns for backers. Ibrahim founded Full Cycle with the goal of halting the effects of climate change by hastening the adoption of technology that restore the environment. Ibrahim's network of business people, investors, and industry leaders in the sustainability sector is unmatched thanks to his efforts. Over his career, he has raised $500 million to support dozens of startups. Ibrahim has launched and exited multiple ventures. He is the creator and managing partner of the Husseini Group LLC, a company committed to supporting and advising initiatives that prioritize environmental sustainability and social improvement. In addition, he co-founded the following businesses: Mecca Communications, which created and executed private label instant messaging strategies Eco Perks, a startup that offers a loyalty program to environmentally conscious consumers. Natural Solutions, Inc., a pioneer in the marketing of natural industrial cleaning products, and Packet Inc., a leading designer, developer, and supplier of cellulose fiber molding equipment to the packing industry. Abraham, whose parents are Palestinian refugees, was raised in Saudi Arabia before coming to the U.S. for college in the early 1990s. After graduating from the University of Washington, he started his first multi-million-dollar company out of his dorm room. Ibrahim presently serves on the boards of over 6 organizations, such as the Culture Project and the Global Partnership for Women and Girls, that promote the betterment of people and the environment. Ibrahim did, in fact, invest in Tesla at an early stage. He mentioned on a Nexus podcast that the majority of people are unaware of the following statistic. He said that if you stop at any traffic light in Los Angeles, you're sure to see a Tesla, a Model Y, a Model S, a Model X, a Model X, a Model 3, or any other model of Tesla. He asserted that major cities like Berlin, New York, and San Francisco experience something similar. According to him, there are 1/3 of 1% of automobiles on the road that are Teslas. That's arguably the biggest and most evident perceived climate success story available, even after 17.5 years. However, Ibrahim discussed his thoughts on Tesla stock after selling his shares in an interview with Julia Borstein and John Fort on CNBC's Tech Check. He states that he won't reinvest until the EV company's stock falls below $400 per share. It's important to remember that Ibrahim sold his Tesla stock at a price of $1,000 per share, or roughly $1 trillion. Then John Fort questioned him about the value of Tesla and the amount he would be ready to pay to regain access. Ibrahim replied, "I was fortunate enough to look to see the company back when it was a private company and invested in late 2008, I believe, and sold the big chunk in 2013 and the rest when it reached over $1 trillion. In a different interview, he stated that the value of Tesla shares surged drastically by 4.5 times in 2020, from about $300 per share at the beginning of the year. He explained that this is the case because the public is now aware of how exciting this industry is, how many electric and hydrogen vehicle manufacturers there are today, and how inevitable it is for transportation to become more electrified. Would you purchase Tesla stock today given its recent track record in the stock market? Please share your thoughts with us by using the comment area below." He mentioned that he examined Tesla's distinctive feature, that is, the fact that 37% of its stockholders are individual investors, in his interview with CNBC's John Fort. Ibrahim reasoned that once the funding ran out and the public's perception of Tesla CEO Elon Musk began to erode, many of those retail investors would also begin to realize that the stock's 79 times price-to-earnings ratio was excessively high. This was due to the combination of gamification of government capital investments and Musk's persistent outreach to these investors. Ibrahim thinks the price tag is excessive, even though he has long-term faith in the EV company. He stated, I believe the right price is around $400, so I'm going to wait on the sidelines until I pick it back up at that price. At this point, Fort questioned him about the $400 price tag and the reason Tesla hasn't been Netflix, pointing out that there would be rivals that enter the market and flourish, but haven't really succeeded with EVs yet. However, they have been streaming, which has finally prompted Netflix to re-rate. This kind of Tesla vs. Netflix comparison does not really make sense to Tesla devotees. Ibrahim responded, it will happen at Tesla anyhow. I'm not sure if it will be smashed to that extent, but even if it does, I still believe in Tesla in the long run. Because I envision it surpassing the $1 trillion and $3 trillion threshold in the long run. I'm delighted to own it again for the long haul, even if it drops below $400. However, we're talking about 8 or 10 years out, and I'm content to hold this stock for the long run. According to him, there are already 7 different EV models available, ranging from entry-level to luxury. As a result, consumers will eventually have more options, and the relationship between Tesla and electric vehicles will begin to wane. He also discussed how Musk's reputation as a divisive leader affects the business and its stock price. He declared, the fact that the brand is becoming a little tainted is the reason I'm hesitant on the Tesla consumer long-term. The founder's many unpredictable actions are confusing the association of it being a sign of the future. Elon Musk, the CEO of Tesla, is undoubtedly a contentious figure in politics. Most people, nevertheless, believe it to be a ruse to increase Tesla's and his visibility. Some claim that without spending a single cent, this is an excellent marketing tactic. With Tesla's stock currently trading at $891.83, investors are growing increasingly confident in the electric vehicle company's ability to continue making money. Since Tesla's Q2 deliveries was reduced to 270,000 units from 316,000, Morgan Stanley analyst Adam Jonas actually reduced his price objective for the company from $1,300 to $1,200, but he is still optimistic on Tesla. Jonas claims that the decrease is the result of Tesla lowering its Q2 delivery forecast volume from 316,000 to 270,000 units. Wedbush analyst Dan Ives is another well-known Tesla bull in addition to Jonas. He still lists the business as one of his top choices in technology. Ives thinks that as China resolves its production and demand concerns, Tesla should start to see some light at the end of the tunnel. Even while Tesla has stated that it will be slowing down hiring and laying off 10% of its paid workers, Ives notes that many businesses are making cuts in less lucrative areas in order to maintain profit margins, indicators of the company's sustained expansion. According to the analyst, include additional hiring in the manufacturing sector, particularly in Austin, a ramp-up in Berlin, and a possible second factory in China. Longtime Tesla bear and analyst Brian Johnson of Barclays is on the more gloomy end of the spectrum. Johnson argues that the stock's $370 per share price target is simply too high given its current valuation. Analysts predict that shares will drop another 50% before they hit fair value. Looking at the difference between Tesla's $200 billion AIM and its $1 trillion valuation, Johnson says a lot of smoke has been blown about Tesla's investments in alternative energy, robotaxis, and robotics, all of which are still very speculative. Analysts' differing opinions on stocks are not unusual, particularly when it comes to contentious companies like Tesla, which was the first to offer electric automobiles to the market. Check out our channel and other videos for more information about Tesla stocks.